Hello there, it's David here from Dingle Lane. Many businesses now are facing a prolonged period of changing circumstances. They're having to adjust ways of doing things, they're shifting modes of working, they're adapting to changing customer expectations. And a large part of the work that practices like mine do is to help you manage and reduce the risk involved in those processes. We explain in what I hope is plain English how to take appropriate actions and to strengthen your core business for the medium to long term. Now, one of the things that we do use is a diagnostic tool that helps us to identify the key issues for you to help navigate through these times of disruption. Not only in managing your financial activities, but also strengthening your strategic focus. And key to that is identifying priority actions for immediate engagement, if you like. Now, as you'll have heard me bang on umpteen times, if you've kind of followed what I do, one of the things that I bang on and on about is the importance of accurate and timely information. One of the reasons why that we're big fans of cloud accounting and data capture. Now, we use a number of ways to do this in the firm and in the work that we do with our clients. But at the core of it really is a whole series of questions. Now, it helps that I'm a bit of a nosy blighter, really. But in reality, it does help strategic and vital accounting service providers like Dingle Lane to gain a really deep understanding of your business and its drivers, so that it helps us better serve and guide you through the good times and through the bad. And so what I thought I'd do for the rest of this short video is just to ask you some of the kinds of questions that we get involved in when we work with you. And we'll see how we go. So here are some of the questions that you need to think about. Firstly, of course, how often do you look at your statement of financial performance, your statement of financial position, your statement of cash flows? A lot of businesses, of course, when they first start out, look at them maybe once a year, once a month. And quite honestly, that's far too infrequent, particularly in fast-moving and fast-changing business environments, where, to be quite honest, your financial controller, your finance director needs to be looking at these at least once a week. Certainly, the reports to the senior management team need to be at least monthly, preferably at least bi-weekly, against the key performance metrics. And I spoke about key performance indicators in another little video. Have you prepared and have you reviewed 3, 6 and 12 month cash flow forecasts? But not just one cash flow forecast for each of those periods. Have you flexed them? Do you know the differences between your best, worst and most likely case scenarios? Do these help you benchmark actual and predicted performance? Do you know why the differences occurred? Can you manage your cash flows, both incoming and outgoing, to improve your business position? A critical feature of these cash flows, amongst many other things, and something that many businesses don't do, and boy have they since come to regret it, is what we call a sensitivity analysis. Nice bit of accountantese there. Basically, if something major comes along to significantly change your business model, for example, you lose a major customer, or if a major supplier fails to deliver, what's the impact on your business? How quickly could you respond? In some cases, how quickly would you know that had happened? Critical information. If you carry inventory, how's your stock moving? Can you reduce, reuse, recycle or repurpose slow-moving items? Have you reviewed your restocking policies recently? Certainly in the current changing business environment, I would suggest that you need to revisit your restocking policies on a very regular basis, because the business mood is likely to be changing quite significantly and in lots of different directions over the course of the next 12, 18, 24, 36 months. Now, one thing that I absolutely insist on, and forgive me, but if you're not doing this already, you really should go and give yourself a slap, is to review your debtor and creditor ledger balances. Do follow up on them. Review your forward orders. Look at your credit checks, your payment processing systems. How good are you at getting cash into your business? And how good are you at stopping it leaking out unnecessarily? Are you reviewing your asset base? Is it appropriate for what you do? Is it being financed appropriately? Is it giving you the best return that it can? And finally, you might say, review your financing, your liquidity commitments. Are you compliant with your debt covenants? What's your margin of safety? How much flex have you got in there should something unexpected happen? I hope that that's been a useful set of questions. Naturally, there's an awful lot in there to unpack, and you may have to watch this video a couple of times to really get the best out of it. We'd certainly be delighted to work with you on them. If you think that would be of help, please drop me a line on david@dinglelane.co.uk. Have a look at our website, www.dinglelane.co.uk. And other than that, enjoy the challenge. This is a great time to be in business. This is a great time for you to be entrepreneurial and to really make the most out of your skills and the reasons why you were in business. Take care. This is David from Dingle Lane. Nano.